Yeah, and that's there.
I had to get it in. Sorry, we were ending
Yeah,
the
listen,
conversation
Matt
there.
and I do our pre-production, and we talk. And we were having a conversation as the credits were running, and Matt was not done talking about that.
No,
Uh,
people know I'm going to get my last comment.
Welcome out to the Tuesday halftime report. We're going to talk inflation. We're going to talk Oracle earnings. We're going to talk some more inflation. We're going to talk about stubborn bulls. We're going to talk about the safety of tech. And before we talk about any of that, Matt, what are we doing on the coaching show tonight?
We're going to come to a conclusion on the AI conversation here tonight. Dialing in week one, we talked about the AI space, what it was, we defined it, really went through kind of not just what is AI, but all these different components of AI. In the second week, we really spent the coaches show really just dialing in the stock side of the equation. What stocks do we want to think about putting on the AI watch list? And then tonight we're going to come to a conclusion on that saga in discussing the specific stocks that go in the watch list. And I'm hoping to get a PDF for the community with those AI watch list stocks. But we're going to come to a conclusion on that conversation. And I'm also going to because I don't believe that's going to take up the bulk of the coaches show here tonight. For our pro members of Tackle Trading. Tonight, I'm also going to do a little bit of a technical discussion on a topic near and dear to my heart, something I love talking about from an educational perspective, something I love tracking from a pure technical perspective. And that's something I feel is extremely important to understand, especially maybe not in these current breakout condition of the market, but take gold, for example. Having an understanding of the depth of the retracement conversation. So I'm going to go through an anatomy of retracement analysis, dialing in bullish retracements, talking about the levels of bullish retracement analysis, flag-based patterns, retracements, steeper retracements, the type of technical patterns to really kind of anchor against in the depth of the retracement conversation. So we're going to have a lot of fun here tonight, dialing in the conclusion of the AI story, as well as talking a little bit about the depth of the retracement from a bullish retracement perspective. We're going to take that conversation tonight. So a little bit of AI and a little bit of education here tonight for our Tackle Trading Pro membership. And hopefully all the pros can join me here tonight. And if you can't, make sure to catch that recording. We usually get it out there pretty quick.
Well, listen, I very much look forward to it. I know I've heard a lot of positive feedback, on this special series that's going to conclude tonight in part three. Before we get the technicals, let's go to Forex Factory, Matt. Let's talk about inflation. My goodness, I would have hate to see if inflation actually came in good, what stocks would have done.
Um, Listen, the jokes kind of write themselves for the market today, quite frankly. I'll just put it like this. JP Morgan came out with a note yesterday that stated if inflation, and they were talking about the CPI report here today. If the CPI report comes in at 0.2, 0.3, year over year, probably comes in at 3.1. In that scenario, mark it up a point, 1%. If the CPI
About
report
today's
comes
price
in at
action.
yeah, if the CPI report comes in at 0.3, 0.4, market probably contracts 0.52%. JP Morgan, the market resiliency here is something to behold. But I can't throw any shade on JP Morgan here today for being wrong on that, because I think that would have been my personal expectations. I think that would have been your personal expectations. I think that would have been everybody's personal expectations. And yet, here we are with the bump up in inflation. We came in on the month over month numbers, 0.4, 0.3. That 0.4, 0.3 is basically the core versus the non-core. And for those of you that don't understand core v non-core, simply hit this detail button, and all these economic reports, they'll tell you what it measures, what the usual impact is, why traders care about it. And when you're looking at the core CPI, well, it excludes food and energy. When you're looking at total CPI, it does not. It takes into account everything. Regardless if you strip out food and shelter, energy and food, doesn't matter. They both came in at 0.4%. And what's fascinating to me today, and truly I mean that, what is fascinating to me today is what I'm reading by Wall Street institutions regarding this bump up in inflation. they're discounting it across the board. They are discounting this bump up in inflation across the board, saying, oh, it's just shelter. Oh, it's just energy. Wall Street, PSA time. Just shelter accounts for the vast majority of the inflationary impact on most people in America. Food and energy would be an extremely close second and third. Those things are not just things you just discount. Those things have a real impact over a real time period, and you have to take it into equation, quite frankly. I also think you have to take into equation this 3% handle on the year-over-year numbers. A couple months ago, we were about 2.9%. The last couple months of inflationary data have not been good in my estimation. Extremely sticky around that 3%. And it has not just been the last couple months of stickiness around that 3%. We've been dancing 3% for now, what, 8 consecutive months, right around the 3%. Going down from 9 to 3 was a walk in the park. But now that we're at 3, it is getting extremely sticky here at the 3% handle over the last 8 months. And so I think Wall Street's getting this one wrong, quite frankly, on the inflationary situation, trying to discount the bumps up in inflation. I think the data is here, and the data suggests that we're going through some sticky inflation at 3%. And the last 2 months of inflationary data does not suggest to me anyways that this is the ammunition that the Fed needs to cut interest rates. No. This is the type of data that says we have to be vigilant against inflation. We got to stomp that inflation into the dirt. We got to put that last nail into the coffin of inflation. You don't mess around with double dip inflationary scenarios. You got to be vigilant against that. And the last couple of months has just been a little bit too concerning for me. And my comment to come into the halftime report, Mark made a statement, and I said, quote, they can paint 3.1, 3.2% any way they want. It doesn't change the outcome, because the simple reality is this is a bump up. That's sticky at 3. And this is concerning data, in my estimation, for the people that think the Fed's going to be aggressive on the interest rate cut perspective. I don't. This data suggests that the Fed doesn't either.
Give me yields. Bonds usually tell the truth. Not always. Nothing tells me truth. Give me TNX. You know, when you're doing analysis of whatever, that candle was like, yeah, that's sticky inflation. That candle today is like, yeah, Fed probably, you know, I mean, that candle's, I think, the one telling the truth in the market today.
Oh, listen, if you always want to get the truth of the market, it's the $1. That's the truth. You can manipulate the bond market a little bit more than the currency market, in my estimation. So for me, the truth of all economic data is the United States dollar. That's the truth of all economic data. And if you see a bump up in inflation, that's going to keep interest rates higher. That's going to create demand for the dollar. Dollar goes up, yields go up. That tells the truth in the short term. The market tells lies all the time. All the time. That's why we have to say which one's telling the truth here. I think the dollar's telling the truth a little bit. So in terms of the ultimate conclusion of what this means for the market moving forward, I think you just go back into your, quite frankly, data comes out, data gets priced into the market, we move on, and now we talk about it from a technical perspective. And so we do have a little bit of concern that the algo move and the Wall Street trying to paint this inflation as something other than it isn't. That's a little concerning in the short term. But from a technical perspective, you don't have a problem with this market from a technical perspective. It's a very consistent market. You got a trade set up, you trust it, you hit it. I don't have anything other to say on the market technically here. You're just in a little bit of fading price action here. You haven't done anything wrong in the broad market. But this market is not a broad market conversation. This market is told at the sector and the industry level at this point.
Yeah, I know. And at the sector level, we're seeing growth, lead today.
You are.
You're seeing growth lead today. RSP equal weight flat on the day. Not do it.
In an inflationary environment, the last couple of months, the market is finding safety in the overvalued, overextended tech trade.
My brother don't break out sarcasm very often.
No, I don't.
He doesn't. Matt does not break out sarcasm often. That is my job.
Sarcasm can be misinterpreted quite amazingly.
But yeah, it's the algos. It's like let's push small caps, ARC, RSP, other measures. Not doing anything today. Doing anything. Tech pumping, right?
Yeah,
Because
but again, tech pumping, but is tech again on days like today, it's not just what goes up and what goes down. It's do we have a technical change? Do we have a
and
behavioral
the
change
answer
that
to that would
associates
be,
with the technical change? No, of course not.
and the answer would be no.
You're stuck within the middle of the range. And the middle of the range is extremely tight, given the fact that the previous breakout didn't lead to an additional leg. So you see this as a slowing momentum environment in general. Tech's doing good here today, but I don't think you can make an argument that tech is looking like it wants to break and run here. It's having a good day. That's good. I still feel like we might have a pullback scenario. So let's see what happens here. When you're looking across the board here at the aggressive, I think discretionary looks a little bit better here from a pure technical perspective. In fact, I do like the technical setup here coming from the flag with a little bit of uh, uh, a base type conversation here. When you're looking at communications getting ready for a little bit of a clean breakout. I do prefer the communications breakout over the technology breakout right now. So when you're looking at the scenario in the aggressive areas of the market, they don't look bad. Like tech's not a bad chart. It just has slowing momentum associated to the trend. Communication, not a bad chart. This looks like a pretty decent breakout situation. Discretionary, not a bad chart by no means, but again, you'd like to see a little bit of confirmation here on the flag based pattern. So, following CPI day, honestly, you're looking at breakout analysis in most of the aggressive areas of the market, except discretionary, which are really just tracking a little bit of a flag based pattern. On the cyclical side of the equation, let's look at finance very quickly, just continuation analysis. That looks like it's breaking out just a little bit. Industrials, kind of a little bit of a slowing momentum, choppy flag right now. I think after the parabolic move in industrials, it might take a little bit of a break here. Energy looks perfectly fine here. It's on its journey to 90. We're going to get that in the next day and a half or so, it looks like. DMATs, nothing really to see here from what we talked about yesterday. An overextended environment, need to dial in 90. Let's get that 90 dialed in. And the most likely scenario as we get 90 dialed in basic materials is we're going to be tracking a nice little bullish retracement within the gold markets. And that's exactly what's transpiring here today. So I really don't see anything really changes following the CPI release, because we really didn't see any patterns change, if that makes sense, Mark.
No, and the
Price action
data.
within patterns is just price action within patterns. To really get a change of direction, you got to have those patterns change. So I really haven't seen any change in discussion following the CPI report.
And the CPI report was not so dramatic that it's going to linger, right? Like as far as
I'm concerned about inflation does not mean the market's concerned about inflation.
Exactly. And so it's one of those things where narratives, they'll move on and they'll move on.
They tried to blow up that CPI report within 5 seconds of the release. Within 5 seconds of the release, Wall Street institutions were putting out notes suggesting that there's nothing to see here, that it's just shelter, it's just energy.
I know it was actually disgusting.
I'm like, you can't just say just shelter. Like,
how
put that in, that sentence should never exist when it comes to inflation. Just shelter is discounting the number one impact to consumers, which would have a downstream impact on consumer spending and consumer spending habits. So no, it was obviously the machine of Wall Street was active today, this morning. But again, to answer the question specifically, Mark, yes, I have concerns about inflation. I think this is bullish with gold, quite frankly, I do. But the market's not going to care about it when the market is fully embracing interest rate cuts on the back half of this year.
Yeah, no. And so it's one of those moving forward, like back of our head, inflation is here. I mean, I'm just talking from my own portfolio, big picture. Inflation's sticky. Market's probably going to move on to the next story as soon as it pops up.
Well, and to me, it really doesn't change anything macro for me, because I've always felt for a very, very, very long time that we're not going to get an actual 2% inflationary handle, that soft inflationary target of 2.5% is the thing they're actually working towards. So it doesn't change anything for me. I don't think you could put me as more bullish on gold. So like it doesn't
Yeah.
really change anything for me.
Yeah, no, and let's go over to gold.
Further evidence on gold ownership, I would say.
Let's go over to gold. This is another day. You don't have a gold position, start one. Which will be our message tomorrow and the next day, right? It's just yeah, it's just interesting to see what price does here. But
Well, I find the technical conversation really fascinating here.
mhm.
And yeah, Mark, you're right. That is our general message at most times, when it comes to gold. Just we have such an opinion on gold ownership and inflationary asset protection assets that yeah, we think inflation is going to be here to stay to a certain extent, and you should have portfolio assets in your portfolio that are designed to protect against inflation. Gold obviously is one of those. The technical conversation on gold right now, I think, is really compelling. And usually I do get a little bit of annoyed when we're been debating 2 months of neutrality in gold, breaking down a short-term swing trade there. But when you are at an overextended situation and you're seeing the development of a traditional bullish retracement here or a bull flag-based pattern, I think that's something we should track in the ultimate short term. And so when you're looking at the depth of the retracement here, the first thing, and I'll talk about this tonight in the coaches show in a little bit more detail than I'll do in the halftime report, obviously, but there's basically 3 stages to the depth of the retracement conversation. And a retracement, for those of you that don't understand what a retracement is when any area of the market establishes a clean area of higher level of resistance, and then the market starts doing what's called pulling back. It's some people refer to it as profit taking, some people refer to it as a pullback, some people refer to it as a retracement. They're all kind of describing the exact same thing. Price was high. We want price to come down a little bit. So so you have 3 stages of the depth of the retracement. You have flag-based patterns, which are often considered momentum-based patterns. You have standard retracements, and then what's called a deeper retracement. And so when gold's starting to pull back a little bit here, I just think you got to be ready to look at where those specific adds would be, even if you are thinking about it a little bit longer term. Right here around the 9 EMA is always going to be an important zone for us in momentum-based analysis. Typically, I don't love momentum when it comes to gold, but I also don't love the bumps up for 2 consecutive months in inflation either. And so when you're looking at this potential pullback, if you are treating gold as a pullback instrument to add, the first level you would be looking at is the 9 EMA. The second level, because of the current momentum of the environment, might be a little bit more difficult to assess given the fact that you've had some parabolic momentum. I'd probably put that on a weekly chart, and that would be the old breakout channel, Mark. It's a distance away. You got that right around 2100. If you get a deeper pullback around that 2100 zone, that would be beautiful. That would be absolutely beautiful. You get that 20 period moving average to converge against 2100, right where the old breakout zone. That's what I would refer to as a traditional bullish retracement. If you come down in between that 9 EMA and somewhere around that 2100 zone, that would be one of those traditional retracements. I'm not sure we're going to get it given the momentum of the current condition in the trend. It might be a 9 EMA. That's why you got to track the depth of the retracement. I'm thinking momentum here against the 9 EMA or traditional against the 20 here. The only other thing, if we don't get a retracement here, because 1 day pullback is not a retracement. To get a flag, you need 2. To get a retrace, you need 3. Those are minimum standards. And so a 1 day pullback, that's not a pullback. That's just volatility today. That's an algorithm today. That's nothing. And so if we don't get a pullback here, you could see a scenario where we're back up dancing a high base or some degree of pattern development around 2200 here. So you could see some compelling situations 3, 4, 5 days from now that from a development perspective within gold itself. Now, when you're looking at gold's proxy that we'd like to talk about, that's GDX. I've said this for the last couple trading sessions in the halftime report. I expect development at 30. We didn't get it yesterday. CPI day provided that development for us. A little bit of a snapback, kissed off the rising 200-day moving average here. I do not see this as a negative. I see this as a really good positive, and I'd love a couple more days underneath that 30 handle to dial that 30 handle in. I don't want to catch momentum parabolic here. I want to get a good pattern that we can anchor against that $30 handle. And so we are getting the development that I felt we were going to get coming into 30. We just had to get a little bit of a snapback with the CPI report to get it.
Yeah, no, let's go over to oil real quick. This thing on the monthly chart is one for the ages. It's a textbook example of time frames pushing against each other, or as we like to call a pinch, right? Where you've been caught,
Old-fashioned pinch.
you've been caught between the 9 and the 20 for almost the entire month. And you barely budged.
Which is amazing because we're almost in the middle of March, and that pinch is tight, Mark.
And it's tight. Yeah, there's not much room, and oil's not moving much.
And it's been 12 days in the month. Like, this is not like day 2 of the month here. Like, there's obviously a battle going on.
There is a genuine battle here. And so this is like, listen, you get towards the end of the month, and this is what you get towards the end of the month, I'm going to be very, very interested. If you break out towards the end of the month or the start of April, we'll be adding exposure and probably a good chunk of it. But it's development while we wait. Development.
Yeah, it's when you're staring down the barrel of those longer time frames, it takes a while to get there. You know what I mean?
Yeah.
The daily chart needs some cleaning up here.
And
I don't have a directional read.
Well, what do you and Frank say cleans up a chart more than anything?
Nothing cleans up a chart better than a breakout does. That's the number one thing that cleans up a chart is a breakout. The second thing that cleans up a chart is a deeper retracement.
Yeah, so we will be monitoring
this
that.
Even be a retracement. It would deeper sell-off, deeper retracement. You got to get underneath those moving averages more than anything, Mark. You can't develop within a cluster of moving averages. And so whenever you develop through consolidation, that consolidation has to be a long time for all those moving averages to converge against one another. So yeah, it's just one of those things. To clean up a chart, you got to break out or you got to sell off.
Yeah, and let's go over to Bitcoin. Let's go to church. Very normal price action right now, considering the trend, right? When you get this extended, you're going to have days that just are down, right? As moving averages catch up.
Is that how we're describing Bitcoin now? Is just every now and then you're going to get a down day.
It's church, dude. You don't speak irreverent in church.
That was the kindest way I've ever seen anybody describe a red candle.
It's church.
Every now and then, guys, we're just going to have to deal with the red candle.
You're just going to have to deal with a red candle at the top of the chart when you've moved 70% in 5 weeks on a major asset.
Now you're getting aggressive. Okay. That's fun.
Both of us, the conclusion of it all, not anything to see here today. Not anything.
No. I mean, you're in that same fading pattern. Like I said yesterday, I would have loved another day of development. Didn't get it. IBIT, which is the ETF that I anchor against now, it's developing. Like I said yesterday, you could go above the high. I would love to see a little bit of better development here. Usually when we're talking about parabolic uptrends, it's the development needed is the 9 EMA. That's usually the thing that technicians at tackle will anchor against when you're dealing with overextended situations is give me another day, let that 9 EMA catch up. We anchor against the 9 EMA in short-term analysis quite a bit at tackle trading. And so if you get a 9 EMA tester, we love it. You don't, we're like, oh, it's amazing what one day can do, quite frankly, in the marketplace. But you're just going through the same thing, parabolic uptrends, and probably needs a little bit of development here.
Yeah, let's get to stock talk.
Coinbase had some positive news.
Well, break it down. Where are you going to start?
I'm not going to start with Coinbase. They got upgraded from sell, basically. So good news, relatively speaking, we will say. But I'll give that news here in a second. I want to start with Oracle, Mark. If there's a stock that just reflects the current environment more than Oracle, I'm certain we could list out 20 stocks that reflect the environment more than Oracle. But just for today, Oracle represents a lot of what this market is right now. Oracle represents a lot of what we've been going through in earnings over the last 4 weeks. You go out to any financial mainstream media, right? You go out there and you listen to CNBC, Bloomberg, Reuters, don't care what the publication is. How do they describe Oracle's earnings report today, Mark?
Well, I rely on you, but I'm always looking at headlines. Oh my gosh, fantastic. Oh my gosh, their AI products are selling nonstop. It like just these headlines of like suck me in. I was like, one of the first questions I asked you is like, how good was Oracle's report?
And the first question Coach Mark asked me when we got into the
first question,
Zoom, the first question, not on gold,
not on inflation,
not on yields, not on the dollar, not on anything macro that me and Mark geeks out about all the time. Nothing. His first question to me was, how good was Oracle? That was his first question. And I said, Mark, I know why you asked that, because everybody else is describing it as something that I'm not. Oracle was okay. It was. If Oracle dojied on this earnings, I would say the market got it right. That's what I would personally say on this release of Oracle's earnings. I don't think this is a bad report out of Oracle. I don't think this is a selling report out of Oracle, but it is certainly not how they, quote unquote, describe it out there in the financial media. Oracle comes in today with a slight beat on EPS. They came in at 141. Expectation was 138. That's not going to wake anybody up, quite frankly. Revenue came in line today. Okay, so raw numbers right in line. All right, we know raw numbers get a boost in this earnings season. If you come in, if you have a beating heart in this earnings season over the last 4 weeks and you did not just crater on EPS, you got to bump up. All right, so let's say 3% bump up on a slight beat on EPS numbers. Okay, good. So you gap up, you doji. I don't have anything to say there. So this has to be a guidance story, right? If the raw numbers are where the raw numbers are coming in line on both EPS and revenue, it's got to be a guidance story, right? Got to be a guidance story. All right. Well, they do provide guidance and they flat out reaffirm guidance across the board. Revenue, EPS, they've reaffirmed guidance. So I gave those raw numbers and I gave the guidance update to Mark. He's like, well, what's going on then? The context of what they quote unquote said about the future was orders are coming in. We can't even handle those orders. Orders are this, bookings are that. We're seeing record this. And so you saw a lot of words associated with.
You saw great headline material.
Oh my goodness. Mark, the only question I have then, this is the only question I have. If all of those words are real, if all of those statements are true, if those bookings and everything they discussed in the context of that report is true and accurate, why is it not reflected in their guidance? The official guidance numbers that Oracle provides, because that was reaffirmed here today, not a change. So I don't have a negative take on Oracle. I have a negative take on what Wall Street tried to do on Oracle's earnings report. That's my negative take.
That's why I go to you for earnings on this stuff, because I assumed when I saw the headlines, I assumed that you had maybe a mini NVIDIA. That's how strong the headlines were, where you have these beats and raising of guidance substantially.
That is absolutely disgusting to put Oracle's guidance into the same sentence as what NVIDIA has done. Like, and I know they did it. I'm not saying you did it. I know who did it. I'm just saying that's outlandishly disgusting and inaccurate. It's inaccurate at best. There's a couple other things I won't say at worst, but no, that's not what Oracle was today. What Oracle was today was a good report that ends in Y and we move on the next day. It is not a let's gap up 13% and start talking about a momentum breakout channel and just run. That's not what this report was today. And again, that's just one man's opinion. That's all it is. It's just my opinion on reading the numbers versus the price action in context of my understanding of how the market treats earnings historically. This one's abnormal, but I would also describe this earnings season as slightly abnormal with the how outlandish the market has priced in some of these guidance numbers coming into the market. So no, I don't have a negative take on Oracle. I do have a negative take on the market today because I do think they got Oracle wrong. Oracle slight bump up, like guys, traders, like seriously, Wall Street, get it right. Gap up to 117 high base. We're going to get the 130 handle anyways, but we're going to get a great pattern here. You guys just want to price in everything in 1 second. It's not how it's done. I think the market's got it wrong. I think this might gap fill, quite frankly.
Wow. No, it's Wall Street selling a bunch of stuff this morning. Pushing things hard, like
pushing Oracle while they're selling other things. Great, another day that ends in. I'm sorry, I'm gonna get all passionate on this one, but no, in general, Oracle was a inline report. It's a slight gap up in a normal earnings season. This earnings season has been, if you're good enough, you're great, and that's kind of what Oracle did here today. You were good enough, market prices it in as great. A little bit outlandish for my liking, but again, this market has taken a few things to an outlandish conclusion in the last little bit, so we shouldn't be too surprised.
That's why you're the pro I go to on earnings. What else do you got for us?
By the way, I would love to say something. I would love to have my conclusion to be the exact same as the gap out in the price action here, because it is a compelling multiple time frame conversation. Technically, I just wish I had a better fundamental take to match the quality technical side.
Well, I know, and let's be honest, some of these legacy bigger tech companies, Cisco, PanW, Oracle, spending different, they have not had guidance raises this last earnings season. They have not had guidance raises.
A lot of positive words.
A lot of positive words. NVIDIA is the only one really with the guidance raise of significance, other than
Taiwan Semiconductor. Taiwan Semiconductor had a legitimately great guidance report. NVIDIA had a legitimately great guidance report. Just speaking of some of the tech names out there. All right. Microsoft had a really good report too. But guess what Microsoft didn't do? This.
Yeah.
ADM. A little bit of a different conversation here, obviously. If I offended any Oracle lovers, I apologize.
I do love Oracle. I love the company. I really do.
It's just a numbers thing for me. That's all. That's all. I don't have a negative take on Oracle.
It's just a numbers. Well, I also love agriculture.
I do love me some
agriculture. I do, and I'm not even being sarcastic. I do.
Listen, I've been the dude breaking down a bunch of the consumer staples bottoming patterns lately.
Well, that is a nice bottoming pattern heading into event. What do you got for us?
Well, let's see what their numbers provided here. EPS 136 against the expectation of 142. Revenue comes in light at 22.98 billion. The expectation was 23.65. Revenue down 12% year over year. That's a miss on EPS. That's a miss on revenue. If you're at the top end of the price, this is an obvious gap down. Market has the bullish goggles on right now. Market goes up. So it's got to be a guidance situation. They reaffirmed guidance here. Had a pretty wide range, 525 against 625 expectations. So pretty wide range on the guidance. They come in right in the middle there, 577 on EPS guidance for 2024. So they reaffirm forward-looking guidance, slight misses on the EPS and revenue side of the equation. On net, I think this response is actually a more accurate response despite the misses than the Oracle response, quite frankly, just given the fact that you're coming from the low point versus, kind of gapping up into the 52-week high there. Mark, a decent report in line, the guidance in line. The weekly chart here is compelling. It is. The daily chart is going through a W formation. The weekly chart is going through a little bit of a reversal formation here, a little bit of that rounding bottom type feel. You come out here to the monthly chart, and when you look at the monthly chart, you're just kind of kissing up against these old pivots here, not a real foundational support level that you love to anchor in reversal analysis. But it's not just ADM. There's other reversals that are happening in consumer staples right now. ADM would be put on that same list though to track this potential reversal. And I don't think it takes too much here. We kind of saw where the selling began here today. Gap up into the 50-period moving average, selling off. Dial that in a little bit. Let's talk a little bit about a breakout confirmation against a reversal on ADM. Again, not the only reversal playing out in consumer staples. If you are looking for a consumer staples type stock coming from the low point, there's 3 or 4 quality ones. Maybe I'll talk about that in the coaching show later on tonight.
Yeah, no, and Archer Daniels Quality Company. I know they had, what was it, an accounting worry, something like that caused the gap down.
A restating due to accounting of their vice president who was fired.
And that obviously, and rightfully so, scared the bejesus.
Nobody argues that gap and sell down on Newsday like that. But does that mean Archer Daniels is dead to us for the rest of because some dude did something bad at some company somewhere? Because if that's the case, we can't talk about any company in the marketplace. And I'm not trying to discount it. I'm just trying to say at some point we stop thinking about that news. Does that make sense?
No, Archer Daniels is a quality company. It's a profitable company. It's a dividend company. And pretty good, like a pretty good follow through in the month and a half after that, right? Just took some time off. And I think patterns play here. I do. I think
it gets on a watch list. Don't get me wrong. There's not a lot of food-based companies that you have to track, so it definitely gets on a watch list. I'd like to see development here, but again, I'm tracking a couple reversals here, so I don't know if it's going to be Archer Daniels or something else. But when I find it, I promise you, I'll let Tackle Trading know.
Yeah. Okay. What else you got for us?
Well, it says inflation doesn't matter to Wall Street companies. I agree for the most part is on that. There's no doubt about that. They will pass it on to the consumer. So I just wanted to throw in a little bit of an agreement with my buddy is there. All right, let's talk a little bit about Southwest here today, Mark. That's all I got from an earnings roundup perspective. Got a couple news stories coming out of the stocks though that I think we need to discuss.
Oh, I missed this one entirely.
It's not a good one. I'll tell you that.
I literally I did not catch this one in my feed this morning.
And it's an important one because I know a lot of traders were looking at Delta or Southwest on potential breakout analysis coming into this week. Delta here was in a multiple time frame situation. Southwest kind of in that little bit of consolidation, high base type feel with the breakout. I think that's put on some ice here today following the news out of Southwest. Southwest comes out and they are reevaluating, Mark. Whenever you see that word with a company in the stock market, it's always concerning. We are reevaluating all prior full year 24 guidance. We are including that in expectation for capital spending review as well. On net, I looked into a little bit. On net, it would have cut their guidance in half. A terrible look for Southwest here today. Restating all 24 guidance, there's got to be, that's a lot of smoke, obviously fire.
And when you're up 60% off the November lows.
Yeah, it's not a good look.
Not a good look.
Not a good look. And Peter, just another thought on Boeing. Boeing, and everybody here at Tackle Trade knows our opinion of Boeing. This is a terrible company. It's an unethical company. And if we were not on a live programming, I would have some extremely choice words for this company. They need to get their act together. We need to have most likely some investigations into what is going on in Boeing. I agree with you, Peter. I see it nonstop. A wheel falls off here, mechanical issue there. A Boeing 787 just dropped out of the air like 5,000 feet. Nobody's explaining anything. Don't get me started on the whistleblower. I don't know if YouTube would shut me down on that one, Peter, but I got concern on the whistleblower too. Maybe we'll talk about that in Discord, so I don't get in trouble on that one, Peter. But I, yeah, like it's like if anybody's looking at Boeing here and they're like, "Ooh, good company," no, this is a trash company, and they need to get their act together. And I said this 5 years ago when they had that investigation on those 2 planes that went down. I said, unless every single person associated with those crashes and the cover up of those crashes until they're fired, I'm not saying a good thing about this company. And they haven't fired them yet. So I'm still not going to say a good thing about this company. It's a trash company. You should fire everybody and reevaluate your life goals here. This is terrible.
Well, everyone in management, I am sure there are numerous good people that work there, right? Like, so when you say fire,
Do whatever you
everyone.
want, good. Yeah, I'm not saying anything bad about the people. People just doing their job.
Management, though, has shown
Management cutting corners on safety issues on airlines that consumers trust. No.
management.
No.
There are, anyways. I'm in a good mood today. I don't want to be negative.
What are you talking about?
I don't have
me happy ripping on Boeing.
What do you eat for breakfast? You're on one today.
I'm not. I just like calling.
Listen, you're
not,
fired up today. I know you're
today.
Oh, I know. When you're being sarcastic, that is your version of a good mood.
I'm just saying, like, you got to call a spade a spade. You got to call balls and strikes in the market, and that's what I do in the halftime report. I call balls and strikes. Not everybody's going to agree with my commentary, and not everybody's going to appreciate the sarcasm every now and then. But I'm going to call balls and strikes. Boeing, you're a terrible company.
There we go. There we go. But yeah, I missed that on Southwest.
Yeah, it was on Southwest, no doubt. Then the last news story of the day in the stock market, not the last, but the last I'm going to cover here. Hey, what's up, Camille and Dina? Coinbase gets upgraded. And Mark, if you've never seen a Wall Street institution chase, which you have.
Yeah. Oh yeah.
So is everybody here to tackle. But if anybody listening has never seen a Wall Street institution capitulate, Raymond James did it today. You're seeing it today.
Ooh, how big was the
Coinbase as a sell? Despite Coinbase up from 120 to 260 in one of the most parabolic upward movements we've ever seen. They had him as a sell the entire time. Well, Mark, they upgraded him here today. Gave him that lavish upgrade to market perform here today. Good for you, Raymond James. Good for you. That's all I got. Technically, let's track a bullish retracement on Coinbase, see if we can get a kiss off.
So basically, it took a 400% move from the October lows. 400% for you to finally say, now it's market perform. Yeah.
At some point, do you just pretend you never had it as a sell in the first place, Raymond James?
How about you have technicians on the staff when it breaks out of a 4-month consolidation pattern, you upgrade
technicians? No, they're fundamental. But that's all I got for the report here today. A little quick journey through the skyline, Mark. But a little bit of CPI news, Oracle's news. You had Southwest, Coinbase, a little bit of ADM earnings report. Blue Ribbon Award here today has to go to Oracle despite the market. Oracle, only 2 companies I reported on. ADM, I'm just a little bit more interested in the ADM reversal coming from the low point than chasing an Oracle outlandish move on earnings, quite frankly. So ADM makes a little bit of a watch list. We'll break that one down against some of the other reversals within the consumer staple space.
Yeah, no, well done, sir. I learned things. I feel edified today. Coach's Show tonight. AI Part 3. Matt will deliver that. Must attend if you're a pro member. Get there, make some time, be there at the Coach's Show tonight. I'll send out a little reminder to everyone, inviting them here in a few minutes. But Matt, final thoughts, send us out.
Yeah, as always, Team Tackle, thank you so much for being the best part of Tackle Trading. Thank you for hanging out with us on the Halftime Report all the time. And if you love the Halftime Report, it helps you navigate the financial world on a day in, day out basis. Best way to support Tackle Trading in YouTube is give us a nice little like and share. Help us with those Google algorithms out there. I think I said positive things about the Google algorithms today. It does take that. You gotta tell the Google algorithms a little bit of sweet nothings over time, or it just forgets who you are. So Google algorithms, we said our sweet nothings. There you go. Team Tackle, we love you. If you need anything from us, hit us up at team@tackletrading.com. For the pro members of Tackle Trading, got the coaches show later on tonight, AI part 3, and a discussion on the depth of the retracement. Going to have a great coaches show here tonight as well. With that said, I'll see the pro members in the coaches show, and I'll see everybody else in the halftime report tomorrow.
Have a fantastic day, everyone.
Later, everybody.